Investing is one of the most effective ways to build wealth over time. Yet millions of people never get started because they believe it's too complicated or that it requires a lot of money. The truth is, investing doesn't have to be complicated. With the right strategy, almost anyone can begin building long-term wealth. This guide walks through the essential steps every beginner should know before making their first investment. One of the biggest financial mistakes isn't choosing the wrong investment. It's waiting too long to get started. Time is one of the most valuable assets an investor has because it allows investments to benefit from compound growth. Even small, consistent investments can grow significantly over many years. Before investing, it's important to make sure your financial foundation is solid. If you have high-interest debt, such as credit card balances, paying that off should usually be the first priority. Interest rates on high-interest debt often exceed what investors can reasonably expect to earn in the stock market, making debt repayment one of the best financial decisions you can make. Once high-interest debt is under control, the next step is building an emergency fund. Unexpected expenses happen. Medical bills, car repairs, or temporary job loss can occur at any time. Having emergency savings helps prevent the need to sell investments during market downturns. After building a solid financial foundation, it's time to define your investing goals. Ask yourself, what am I investing for? Perhaps it's retirement, buying a home, paying for a child's education, building financial independence, or simply growing long-term wealth. Equally important is determining your time horizon. Will you need the money in 3 years, 10 years, or 30 years? Your investment strategy should match both your financial goals and the amount of time you plan to stay invested. Before buying investments, it's also helpful to understand the basic building blocks of investing. Stocks represent ownership in individual companies. Bonds are loans made to governments or corporations in exchange for interest payments. Mutual funds and exchange-traded funds, or ETFs, combine many different investments into a single fund, providing instant diversification. Understanding these basic investment types makes it much easier to build a portfolio that matches your goals. The next step is opening an investment account. Retirement accounts may offer valuable tax advantages, while brokerage accounts provide flexibility for building wealth outside of retirement. Today, opening an investment account can often be completed online in just a few minutes. Many new investors believe they need to find the next Apple, Nvidia, or Amazon. In reality, successful investing is often much simpler. For many beginners, diversified ETFs provide one of the easiest ways to invest. Instead of purchasing shares of just one company, a single ETF can provide exposure to hundreds or even thousands of companies. Diversification helps reduce risk while allowing investors to participate in the long-term growth of the overall market. Perhaps the most important habit of successful investors is consistency. Rather than trying to predict when the market will rise or fall, many investors contribute money on a regular schedule. Whether it's weekly, every paycheck, or monthly, investing consistently helps remove emotion from the process and allows wealth to build over time. Finally, avoid some of the most common investing mistakes. Don't chase stocks simply because everyone is talking about them. Don't expect to get rich overnight. Don't panic during market downturns. And don't constantly check your portfolio every day. Successful investing is usually about patience, discipline, and staying focused on long-term goals. Getting started with investing doesn't require perfect timing or expert-level knowledge. It starts with paying off high-interest debt, building an emergency fund, defining clear goals, understanding the basic building blocks of investing, and investing consistently in a diversified portfolio. Every successful investor started somewhere. The most important step is simply getting started. For more beginner-friendly investing guides, free investing tools, and resources designed to help investors build wealth with confidence, visit quickinvestiq.com.